Top three things in my notebook this morning. Number one, Japan. Number two, U.S. equity market volatility. And number three, finally, gold. So first to hit on Japan, we haven't talked about it in a while, so while it shouldn't really be in the top three, I just need to put it there because we need to talk about it. Obviously, Japan's a big place and it matters. Europe actually reversing its early morning gains, probably a bigger point. But again, on Japan, having a down 1% move overnight. We haven't seen one of those in quite some time. So again, looking for Japan to hold intermediate term trend support or not. If it does, it looks interesting on the long side, if only because being long Japan has been a certified train wreck this year. Don't forget that the Nikkei is still down 5% for the year to date. But again, looking at the trend line of support, which is 15,062 in the Hedgeye risk management model as a key line of support there. Now, point number two, which is the most important point this morning, is volatility's asymmetry. This is the third quarter theme that we've been rolling with alongside Q3 slowing. So again, Q3 GDP growth slowing perpetuates volatility in what? In expectations for growth, which is obviously perpetuating expectations in what? Down equities in terms of people's manifestations or ideas of, or a hope or whatever, a lack thereof of growth. So again, look at volatility's risk range. It's really wide. I dare say it's wicked wide. So again, looking at a risk range on the VIX on front month of 1384 to 1792. Okay, so when the risk range is widening, that's a leading indicator of more volatility. So again, watch out for that as the S&P 500 and the Russell 2000 fail at immediate term trade lines of resistance, which are now 1960 and 1139 on the S&P and the Russell respectively. Finally, gold, again, getting some signals here to say, don't be long as much gold. Now, again, people might want to, get upset with that. They might want to be happy about that. They might want to do whatever they want with that. I don't particularly care. I need to listen to the signal, which we're going to put up a note on later today. Darius Dale has a full deck explaining the confluence of what inflation slowing and growth slowing at the same time mean. It doesn't mean something good, I can tell you that. And as you recall, commodities do have beta and they can go down. So again, we're not going to stand in front of that freight train just for the sake of doing so. Intermediate term trend support for gold is still 1271, so that looks fine. All I'm saying is it's losing some of its immediate term trade momentum. 1303 is resistance for gold, so that's what I'm looking at there. And those are your top three things.